1. In this video, I am going to explain you how to fill return of income with the relevant schedules as a partnership for the year of assessment 21-22. You may be an experienced taxpayer who has filled partnership return of income for previous years of assessments. Otherwise, you may be a partnership filling the tax return for the first time from the year of assessment 21-22. I request you to carefully read both guides to fill the return of income and schedules relevant to partnership and individuals, because guide relevant to individuals include all tax exemptions, eligible qualifying payments, tax reliefs and tax rates to which taxpayers are entitled to the year of assessment 21-22. You can file the return manually or electronically. If you wish to file a manual return, you have to download relevant schedules from the IRD website, since the department has sent you only the return of income. I instruct you to start filing from the schedules. If a part of a schedule is not required or not relevant to you, write not applicable across the part of that schedule. If any data filling cage in the return or schedule is not required to be filled, nothing should be written in words other than placing a hyphen. These are the schedules available to you. Schedule 1 is relevant for the details of partners and share of profit. Schedule 2A for the distribution income and capital gains. Schedule 2B for distribution of partnership exempt amounts. Schedule 3A for details of capital gains tax payment. Schedule 3B for details of advance income tax deducted by the agent. Schedule 3C for self-assessed tax payment details other than capital gains tax. Schedule 4A for calculation of tax payable. Schedule 4B for tax credits. Schedule 5A for self-assessed tax payment and capital gains tax. Schedule 5B for qualifying payments and advance income tax AIT. And Schedule 6 for details of partnership loss adjustments, and Schedule 7 is for details of partnership business. So you can fill the schedules first and you can take amount in that schedule to the return in the relevant cage. This is an example. After using this example, I think you can very easily fill the return. In this example, Ms. Rasika and Ms. Tilaka are partners in a partnership. The name of that partnership is Fashion Line Enterprises. In this case, Ms. Rasika and Tilaka shared their profits as 65% and 35% respectively. The partnership carries on the business of buying and selling of garments. Details relevant for the year of assessment 21-22 will be as follows. The net profit of the business is 24,670,000 for the year of assessment 21-22. This profit is arrived after deducting several expenses and adding several income. The relevant deducted expenses are salaries paid to partners, that means to Ms. Rasika 1,427,000 and to Tilaka rupees 973,000. And in addition to that, the partnership has paid loan interest to Ms. Rasika because Ms. Rasika has given a loan to the partnership. The interest amount is rupees 380,000. In addition to these expenses, the partnership donated rupees 1 million to the cancer hospital. These are the income added in calculating their net profit. They have added interest income on fixed deposit, that is 3 million, and capital gain rupees 20 million. The partnership has paid quarterly basis installment payments, that is 95,000. They made this payment on due dates and they made final payment of rupees 7,000 on 30th September 2022. In addition to this quarterly installment payments, they have made capital gain tax payment of rupees 2 million on 2nd February 2022. This is the calculation of Fashion Line Enterprises for the year of assessment 21-22. Since they have a net profit, I have included that net profit in the plus column. There are two columns, plus column and minus column. Since this is a profit, I have included that under plus column, that is 24,670,000. Then the partnership paid salaries to the partners, that is not deductible amount. Because of that, we have added back that amount. For Rasika, they have paid 1,427,000 and to Miss Tilaka 973,000. The partnership should add back those amounts to the net profit, and the partnership has paid interest to Ms. Rasika, that is 380,000, that is also not deductible. Therefore, that amount should be added back to the net profit. Then they have made the payment, they have donated to the cancer hospital, that is 1 million. That 1 million also not deductible under this situation, under this part. Because of that, we have to add that back. Then interest on fixed deposit, they have added that amount into their net profit. It is not a business income, that is an investment income. Therefore, I deducted that 3 million rupees from their net profit. That is why I have entered that income under minus column. In addition to that, the partnership received capital gain, that is 20 million. That amount also included in the net profit. Therefore, I included that amount under minus column because that is also an investment income, not the business income. After setting off the minus amounts 23 million and 28,450,000 in the plus column, the balance will be 5,450,000. That is the business income of this partnership. To that business income, we can add investment income. Investment income will be interest income, that is 3 million, and the capital gain will be 20 million. After adding that to the business income, we will receive assessable income, that is 28,450,000. This is the assessable income. We can deduct qualifying payments from the assessable income to calculate the taxable income. After deducting that 1 million, the partnership will have 27,450,000 as their taxable income. Now we have to apply relevant tax rates. Since they have capital gain, we have to separately identify that gain and we have to apply 10% on that gain. When we are applying 10% on the capital gain tax will be 2 million. On the balance income, we have to apply 0% for the first 1 million, that is interest. For the balance income, we can apply 0% for the first 1 million. Then there will be no tax for that 1 million. And on the balance, we have to apply 6%. That is the rate applicable for a partnership. After applying that 6% on the balance taxable income, that is 6,450,000, payable tax will be 387,000. Altogether, total payable tax will be 2,387,000. This is the allocation of income and expenditure and credits. The partners are sharing their profit at the rate of 65% and 35% to Ms. Rasika and Tilaka respectively. and they had salaries, that is 1.4 million and 973,000, and interest paid to Rasika is 380,000, and then we have to calculate the balance income from business. The total income from business will be 5,450,000. We have to deduct 2.4 million and 380,000 from that 5,450,000. Then we will receive the balance income of rupees 2,670,000. We have to apportion that total income to Ms. Rasika and Ms. Tilaka. Their sharing percentage is 65% and 35%. After that, after allocating their balance business income to Ms. Rasika and Ms. Tilaka, the amounts will be 1,735,500 and 934,500 to Ms. Rasika and Ms. Tilaka respectively. Total business income will be 3,542,500 and 1,907,500. Total business income will be 5,450,000. Then we can allocate interest income to the partners. Total interest income is 3 million. We can allocate this 3 million to partners at their profit sharing rate. So 1,950,000 will be to Ms. Rasika and 1,050,000 will be to Ms. Tilaka. Then total business and investment income to Ms. Rasika will be 5,492,500 and to Ms. Tilaka 2,957,500. We have to remove capital gain from the investment income to calculate this business income and investment income. After that, the qualifying payment can be allocated to partners at their profit sharing rate, and the installment payments also we can be allocated to the partners, but it is not to the profit sharing rate, but we have to allocate that credit to the partners at the rate of their income, that is business and investment income. Then capital gain tax also can be allocated to them, that is at the rate of 65% and 35%. Now we can enter these details in the return and schedules. First of all, we have to fill these details in the schedule. After that, we can take these figures in the schedule to the return. This is the schedule. First of all, we have to enter their TIN number and the name will be printed in this place. These are the available schedules. You can tick each schedule which you have filled when you are filling your income tax return and schedules. This is the schedule 1. In this schedule, you have to fill the details of the partners, name of the partners, their TIN numbers, their NIC numbers and the profit sharing ratio. Then you have Schedule 2A. Schedule 2A is to distribute the partnership income and gain from realization of investment assets. In this schedule, you have to include salaries and wages paid to the partners. Partner A will be Ms. Rasika and partner B will be Ms. Tilaka. You should enter these details in the column 205. Then the interest paid to the partners should be included under column 206. After that, there will be a balance income from the business. You have to enter that amount under 207 column. After that, you have to total the column. You have to total to this column 205, 206 and 207 columns. Business income will be the aggregate of these columns. Under Ms. Rasika, you have to include total business income under 208 column in the line under A. Line B is to Ms. Tilaka, So total business income of Miss Tilaka should be included in line point 2 under B. Total business income of Miss Tilaka and Rasika will be 5,450,000. And after that, you have to enter investment income of the partners. To Ms. Rasika, interest income will be 1,950,000, and to Ms. Rasika, interest income will be 1,050,000. Total interest income will be 3 million. We have to include that amount under investment income. Then there are no other income to these partners. Total partnership income will be the aggregate of the column 208, 209 and 210. After aggregating those amounts, for a partner A, the aggregate business and investment income will be 5,492,500, and to partner B means Miss Tilaka, the income, total income will be 2,957,500. Total assessable income will be 8,450,000. Then we have to separately identify the gains on realization of investment assets, that is capital gain. In this example, capital gain is 20 million. We have to apportion that 20 million into two partners, to Ms. Rasika and Ms. Tilaka, at their profit sharing rate. So Ms. Rasika will receive 13 million and Ms. Tilaka will receive 7 million. Altogether 20 million. We have to take this amount into page 40 of the return. In this example, there are no figures in this schedule because there are no exempt amounts in this partnership. Now we are going to make the payment. For a capital gain, we have to make the payment within 1 month period of the realization of their investment asset. Because of that, this partnership paid on February 2nd, 2022, rupees 2 million as capital gain tax. We have to enter that amount in page 235 of Schedule 4B. Advance income tax payments are not deducted by the agent because they have not given consent to the agents to deduct that amount. Because of that, no amounts in Schedule 3B. The partnership has paid installment payments. For a first installment, they paid 95,000, and to the second, third and fourth installments, the partnership paid 95,000. Then for a final payment, they paid 7,000. Altogether, the partnership paid installment and final payments rupees 387,000. We have to take that amount into page 237 of the Schedule 4B to deduct tax credits. This is the calculation of taxable income and tax credit schedule. Under Schedule 4A, we can calculate the tax liability of this partnership. Under page 229, we can include taxable income. Taxable income of this partnership is 2,745,000. For the first 1 million, that is tax free, we can apply 0% on that, therefore no tax is there. But for the balance taxable income, that is 6,450,000, we have to apply 6% on that taxable income. The payable tax is 387,000. We have to take this amount into page 80 of the return. We have to separately identify the gain on realization of investment assets and the relevant tax on that investment asset. Therefore, that amount should be included in page 233. Relevant tax rate for the capital gain is 10%. After applying that 10% tax rate, payable tax is 2 million. Now we are going to allow tax credits. In this example, The partnership paid 2 million as capital gain tax. We have entered that amount under 235 kg, that is 2 million. In addition to that, they have made installment payments, that is 287,000. We have to add this 287,000 to the 2 million. Altogether, the partnership has paid 2,387,000. Schedule 5 is to allocation of installment payments, capital gain tax and qualifying payments and advance income tax. And Schedule 5A is to allocate installment payments and capital gains tax to the partners. Now we can allocate this 2 million tax paid by the partnership to partner Ms. Rasika and Ms. Tilaka at their profit sharing rate, that is 1.3 million to Ms. Rasika and 700,000 to Ms. Tilaka. We have to add the total payment amount. Then we are going to allocate qualifying payments to the partners. To partner A, means Ms. Rasika, qualifying payment portion will be 650,000. To Ms. Tilaka, qualifying payment portion will be 350,000. In this example, there is no loss. Because of that, we cannot enter any amount in this Schedule 6. If a partnership has a loss, then that partnership should enter that loss in this Schedule 6. If they have a business loss, they can enter that amount under KG 243. If they have an investment loss, they can include that under KG 244. If they have exempt losses, they can include that amount under 245 kg. Then they can deduct their losses from business income or investment income or capital gain or exempt amounts. If they have a business loss, they can deduct from business income, investment income, capital gain income or exempt income. If they have an investment losses, they can deduct only from business investment income or capital gain income. If they have exempt losses, they can deduct that losses only from the exempt income. After that, you have to fill stock in trade, raw materials, work in progress, trade receivables, due from related parties, trade payables, payable to related parties. All these amounts should be filled by the partnership. As at 31st March 2021, opening balances and closing balances should be filled by the partnership. After that, the partnership should be filled details of partnership businesses, that is their turnover, expenditure and net profit should be mentioned under this Schedule 7. Finally, the declarant should be signed in the return. The president partner or any of the partners can file the return to the Department of Inland Revenue. I think this example will help you to fill the return of partnership for the year of assessment 2021. Thank you very much.